PantheonAI presents Markets Brace for Medicaid Cuts, Nvidia's $5 trillion forecast, solar crash. Good morning, everyone, and welcome to the PAI Morning Briefing. I'm John, and today is June 17th, 2025. I hope you're ready to dive into a detailed look at our markets and all the news that's making waves.
Absolutely, John. Always ready to unpack what's really happening out there. It's been quite a week already, hasn't it?
It really has. Let's kick things off with a quick look at where our major indexes are sitting this morning. The S&P 500 is resting at approximately 6,020, with a modest gain of about 0.13%. Over at the Dow Jones, our blue chip benchmark, we're at roughly 42,475, up by around 0.27%.
So modest gains across the board for the big ones. What about the Nasdaq and the Russell?
Yep. The Nasdaq is trading near 19,656, quietly nudging up by around 0.15%. And the Russell 2000 is at approximately 2,115, on a slight rise of nearly 0.07%. So a generally cautious but positive sentiment there.
Cautious is a good word for it. But then, if we shift to digital currencies, it's a bit of a different story, isn't it? Bitcoin showing some weakness.
It is. Bitcoin is just over $104,372, down roughly 2.27%. And Ethereum's following a similar trend, trading at about $2,500, down nearly 1.7%.
So, definitely a recalibration there after some of the exuberance we've seen. But John, as you often say, these shifts, even modest ones, are part of a broader narrative. It's like watching a suspenseful movie with small moves, hinting at bigger plot twists.
Exactly, Sarah. And speaking of plot twists, let's turn our attention to some of the major trends affecting our markets today. One of the big headlines, of course, revolves around technology, and specifically Nvidia.
Nvidia. It seems like they're always in the news lately. What's the latest buzz?
Well, analysts at Barclays have been really ramping up their enthusiasm. They actually believe that Nvidia could ascend to the remarkable milestone of nearly $5 trillion in market capitalization. They've raised their price target to $200.
$5 trillion? Wow. That sounds astronomical, but when you think about the trajectory of AI and machine learning, it's not entirely out of the realm of possibility, is it? It's like they're not just playing chess, but a full-blown game of three-dimensional chess.
Totally. It's not just about a single product. It's their positioning in an industry that's growing exponentially, driven by AI demands and computer vision. That confidence in Chairman Jensen Huang's Blackwell architecture is huge.
Right, and while technology seems to be on this incredible upward trajectory, we're seeing some turbulence in other sectors, aren't we? Specifically, renewable energy.
Yeah, solar stocks. They've taken a noticeable plunge. This downturn seems linked to Senate proposals for a tax credit phase-out, impacting major companies like Enphase Energy and First Solar, both seeing double-digit declines.
It's a bit ironic, isn't it? Just as the government's trying to balance the books, investors in solar are feeling the pinch. But do you think this is a temporary correction, a buy-the-dip opportunity for those with a long-term view?
Many analysts certainly suggest it could be. It's definitely something to watch. Shifting gears to the housing market, another area of concern is coming to the forefront. The National Association of Home Builders reports that home builder confidence has taken a nosedive.
Which means builders are resorting to significant price cuts to try and tempt buyers, right? That's a pretty strong signal of a disengaged consumer base. And it's not just about the housing sector itself. It could be a precursor to wider economic ripples.
Exactly. Changes in housing markets typically signal shifts in consumer spending patterns and overall economic sentiment. It's a big deal. And then, adding another layer to today's narrative, Senate Republicans have put forth a sweeping proposal to trim $1 trillion from Medicaid.
$1 trillion? That's generating a fair amount of heated debate, as you can imagine. Policy analysts are warning about significant consequences for hospital systems and coverage accessibility. It's that classic case of fiscal restraint versus social welfare, isn't it?
It really is. And the balance, or lack thereof, will be a huge discussion point in the days ahead. So when we pause and consider the broader market trends in the context of these headlines, it's fascinating.
It really is. On the one hand, we have technology stocks, with Nvidia leading the charge, injecting so much enthusiasm and bold visions of future growth. But then, on the other hand, traditional sectors like housing and healthcare are facing serious headwinds.
Right. Driven by policy shifts and changing consumer behavior, it really strikes me as if we're watching a tug-of-war between the old guard and the new order, with every swing offering both risks and opportunities for investors.
That's a perfect way to put it. Let's delve a bit deeper into some of these specific stories. That $5 trillion market cap potential for Nvidia, as you mentioned, is really buzzing. Is it really just hype?
Well, it might sound astronomical, but if you consider the trajectory of global technology spending, especially driven by AI and machine learning, it's not entirely outlandish. Their ability to transpose their robust graphics card heritage into cutting-edge AI chips really lends credence to this bullish view.
And while the repeated coverage of this story might seem like an echo chamber, it underscores just how seriously the market is rethinking Nvidia's future. But then, switching back to renewable energy, those solar stock hits are really grabbing headlines too.
They are. Multiple reports are drawing attention to those double-digit drops experienced by key players like Enphase Energy and First Solar due to the Senate's proposed tax credit phase-out. If you're an investor in renewables, you might be wondering if this is a rude awakening or just short-term volatility.
Exactly. It brings to mind that age-old investor adage, buy when there's blood in the streets. Intuition tells us these price declines could present an opportunity, especially if the fundamentals for solar remain strong long-term.
That's a great point. In the world of home building, we've had repeated headlines about that loss of confidence among home builders. The National Association of Home Builders indicates confidence has sharply dwindled, forcing builders to implement price cuts.
And this isn't just about construction margins or a temporary slump, is it? It has much deeper implications for the broader economy. The housing market is truly the bedrock of consumer wealth. Prolonged declines here can trigger effects on spending, employment, even regional economic stability.
Absolutely. When builders glimpse the possibility of a prolonged market correction, it invariably sends ripples throughout the market, affecting everything from mortgage rates to retail consumer confidence. And then there's that sweeping Medicaid proposal we touched on.
Right. $1 trillion cut from Medicaid. That's a policy story reverberating across healthcare and financial sectors. Healthcare providers could grapple with reduced reimbursements, potentially leading to consolidations or shifts in service delivery.
For investors, the key question remains, could this trigger a downturn in healthcare stocks? Or might companies innovate their cost structures in response? Given the intricacies, we can expect plenty of debates and divergent opinions on this front.
Definitely. Let's broaden our discussion to consider the sectorial implications. In technology, Nvidia is really the poster child for embracing and driving innovation. The upward revisions in its price target reflect confidence not just in the company, but in the transformative potential of AI.
For tech investors, this is a clear signal to pay close attention to chip makers and semiconductor stocks. But it's also a reminder that the tech sector, while promising, isn't immune to volatility, especially with geopolitical and macroeconomic uncertainties in the mix.
Exactly. On the energy front, the situation with solar stocks is doubly interesting. While the tax credit phase-out has rattled some companies, the broader renewable energy sector continues to benefit from an inexorable global shift towards sustainability.
It's a bit like experiencing turbulence on a smooth flight, isn't it? The ride might get bumpy for a while, but the destination remains bright. Investors in energy should reassess carefully. Some stocks face near-term challenges, but the long-term outlook for renewables remains generally positive.
I love that analogy. Meanwhile, the housing market's current challenges are a cautionary note for sectors dependent on consumer confidence. That slump in homebuilder sentiment could indicate broader economic uncertainties seeping into other areas like consumer durable spending and retail.
It's a stark reminder that markets are interconnected, and fluctuations in one area can often presage wider economic shifts. And when we turn to financial and healthcare sectors, that Medicaid proposal really deserves close scrutiny.
For finance, which thrives on stability, potential policy shifts of this magnitude introduce uncertainty. In healthcare, any cuts to Medicaid funding can shift company valuations, leaving investors to wonder if current prices reflect underlying risks. Understanding regulatory risks becomes almost as important as earnings reports here.
Absolutely. Let's also consider the global market implications. This tension between innovative growth sectors like tech and challenges in traditional sectors isn't confined to our national market. Global investors are scrutinizing these trends as they allocate capital.
That's a great point. Innovative tech giants like Nvidia have significant exposure to global markets, and their performance is often seen as a bellwether worldwide. Conversely, policy measures like the Medicaid cuts, while American, can have ripple effects on international companies or markets with similar debates. Global interconnectivity means shifts in one part of the world can impact far beyond their borders.
Indeed. And speaking of expert insights, it certainly appears that fundamental shifts are underway. We seem to be transitioning into an era where technology and innovation become the primary drivers of economic growth. Nvidia is emblematic of that exponential growth.
Right. In contrast, sectors that rely heavily on government policy, like renewable energy with tax incentives or healthcare with the Medicaid debate, face inherent volatility as they await clear signals from policymakers. It's a tricky balance.
It really is, and it's important to ask ourselves some thought-provoking questions. What does it truly mean for a company like Nvidia to be valued at nearly $5 trillion? Is it just hype or a calculated bet on a long-term revolution?
And when we see solar stocks plunging despite clear long-term trends towards sustainability, are we witnessing a temporary market overreaction, or is there a deeper structural issue at play? As investors and traders, these are the questions that should keep us constantly reevaluating our strategies.
Exactly. Now, before we get too serious, let me lighten the mood a bit with a quick joke that might resonate with all of us staring at endless numbers on a screen. Why did the computer go to therapy?
Oh, I'm curious. Why?
It had too many unresolved issues with its cache. It might be a silly pun, but it reminds us that even in a world dominated by data, sometimes a little humor goes a long way.
Laughs. That's a good one, John. Definitely needed that. But back to those expert predictions. I believe the trends we're observing today signal that investors should maintain a balanced perspective.
Totally. The continued ascent in technology stocks, as epitomized by Nvidia, suggests we're in a tech-driven renaissance. However, the cautionary tales from renewable energy, housing, and healthcare suggest that diversification remains absolutely key.
If you're heavily invested in sectors that are particularly policy sensitive, it might be worth reassessing your risk exposure. Looking ahead, we really need to watch for further clarifications on that Medicaid proposal as congressional debates continue.
Agreed. Policy outcomes there could have swift and significant impacts on healthcare and financial sectors. Similarly, keep an eye on the renewable energy front as investors react to any new rulings or modifications to the tax credit phase-out. And of course, the saga of Nvidia is far from over. Its performance in the next few quarters could really set the tone for tech stock valuations.
Absolutely. From a sector analysis standpoint, in technology, beyond Nvidia, companies investing heavily in next-generation chip manufacturing and AI platforms are positioned to lead for years to come. Cycles of innovation in tech are volatile, but remarkably rewarding. Look for robust R&D and strong balance sheets.
And in energy, current volatility in solar stocks shouldn't necessarily deter long-term investors. Even with short-term declines, the commitment to a sustainable future remains unwavering. Governments and businesses are ramping up investments. The challenge for solar companies is to navigate transitional regulatory changes while maintaining long-term growth.
For housing, the drop in builder confidence suggests short-term sentiment might remain subdued, especially with higher borrowing costs. That said, housing remains a cornerstone of the economy, and significant policy stimulus or improved consumer confidence could quickly reverse the trend. Investors in real estate should be prepared for cautious optimism.
And for financial services, any instability in policy-sensitive sectors like healthcare with the Medicaid proposal should remind investors to scrutinize balance sheets and liquidity positions. Financial institutions often absorb shocks, but sustained policy uncertainty can lead to tighter credit. A measured approach here, with an eye on regulatory reforms, is advisable.
That's excellent advice. And turning our gaze to global markets, it's important to remember that the U.S. is just one part of the equation. Global economic trends, inflationary pressures, central bank policies, geopolitical tensions, they all influence our domestic markets.
Right. Tech companies with global exposure, like Nvidia, benefit from worldwide digital transformation, while sectors sensitive to domestic policy, like housing or healthcare, might see more localized repercussions. This global interplay means staying informed on international developments is just as crucial as monitoring local news.
So true. And for our audience, we'd love to pose some reflective questions. How do you see the balance between innovative technology investments and more traditional sectors affecting your portfolio strategy? Are you prepared for short-term volatility in renewables to potentially reward astute investors in the long run?
And with major policy shifts on the horizon, what measures do you think companies in vulnerable sectors should take to hedge against potential risks? Each of these topics is interconnected, offering a rich tapestry of challenges and opportunities. The market is, after all, a complex organism that demands thoughtful analysis.
It really does. And amid these diverse signals, remember that diversification and a long-term view often serve investors well, even in the face of uncertainty. So as we wrap up today's briefing, let's summarize our key takeaways.
We started with a quick overview of the major indexes. The S&P 500, Dow Jones, NASDAQ, and Russell 2000 all registered modest gains, indicating that cautious but positive market sentiment this morning. Digital currencies like Bitcoin and Ethereum, however, exhibited some declines.
On the headline front, repeated stories about Nvidia underscore a heavy market focus on technological innovation and AI. In contrast, the renewable energy sector faces immediate challenges from policy adjustments, with precipitous drops in key solar stocks. And the housing market is grappling with declining builder confidence, signaling broader economic shifts.
And in the realm of policy, the Senate's proposal to cut $1 trillion from Medicaid is a story with potentially profound consequences for healthcare and financial markets. It's clear that while technology is poised for significant growth, other sectors appear more vulnerable to policy shifts and economic sentiment.
Exactly. Global market implications further remind us that no market is an island. Every decision is part of a larger, interdependent system. As we wrap up, I encourage you to keep these insights in mind as you plan your strategies for the day and the week ahead.
Ask yourself whether the risks in policy-sensitive sectors are worth the potential rewards, and consider the role that diversified investments in technology and innovation might play in stabilizing your portfolio. It's a great time to engage with these questions and share our thoughts.
Absolutely. And a special shout out to PantheonAI, our information copilot, as we continue to explore these market dynamics together. Your engagement and insightful questions help drive a deeper understanding of the complexities we face.
Before I sign off today, let me leave you with a final thought. In times of market uncertainty, how do you balance speculative optimism with prudent skepticism? Are we fully harnessing the potential of technology while acknowledging the risks inherent in policy-driven sectors? And what will tomorrow bring as the interplay between innovation and regulation unfolds right before our eyes?
I invite you to mull over those questions, and remember, learning shouldn't feel like a full-time job. Thank you for joining us this morning, everyone. Until next time, keep your curiosity alive, your portfolio diversified, and remember that we are in this dynamic ride together.
Have a fantastic day, and I'll see you tomorrow on the next edition of the PAI Morning Briefing.
PantheonAI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.